Hello and welcome to BloombergQuint. We heard a few days back that Paytm may be mulling an IPO. We don't know whether it's going to happen, how soon it's going to happen. All of those are unknowns. But that event gave us a reason to look at the broader payment ecosystem, to ask the question whether Indian payments is growing up. Joining us to talk us through all that's changing at a very fast pace in payments in India is Gautam Chhugani of Bernstein. He's got the landscape all mapped out as always. Gautam, thanks so much for taking the time to speak to us.
Thanks, Ira. Pleasure to be here.
I'm going to start with Paytm only because that's the way to get into the subject. You had a well-timed IPO primer or pre-IPO primer out on Paytm. Look, we don't know what their numbers look like for FY21. Till FY20, they were still making large losses. But I think what your report sort of reiterated was that over the last couple of years, there has been a considerable pivot in the business. Do you want to just run us through what has sort of materially changed for Paytm, which started as a wallet, has done many sort of iterations of what they want to be, and now seem to be this little bit of a marketplace for all financial products, plus from what it looks like?
Yeah, so I think for a period of time, they've added, as UPI came along, they added UPI payments. UPI, as we know, has been a hand grab with significant volumes being attracted by spending a lot of marketing dollars. Paytm obviously at some point had to take a call whether they want to go down that route and keep spending the dollars and do the cash burn. In my view, they've taken a fairly rational approach of not just chasing that. But at the same time, they haven't really given up on that. They've made it more strategic in the sense that they've started focusing a lot more on the merchant side. Because as we know, almost 83% of UPI transactions are person to person. And that to some extent to kind of spend marketing dollars to attract that kind of market share doesn't make sense. So Paytm has kind of doubled down on their whole merchant strategy. And then as part of that, there are sort of multiple parts to this, right? So UPI is just one form of payments. There are multiple business streams which are kind of present in the payment space. So there's online merchant space. So they have a large payment gateway business. They have a large point of sale business, like we know that they've been adding not just the QR code, which is widespread, but Soundbox, and then subsequently even point of sale platforms. And then the whole Paytm for Business platform. So what it has done, and then the whole wallet side anyways was deeply integrated with large merchants like, entertainment, PVR, and sort of travel and bus tickets and all of that they used to do with IRCTC and other things, right? So this whole ecosystem has been sort of geared towards different merchants. And so overall, they've tried to focus on the merchant payment side. And that has made the whole payment side a lot more sustainable and significantly reduced cash burn, to your question around how they've kind of managed to this, the significant losses that you've seen in the past. What's the roadmap going forward? So this whole rational strategy, significantly reduce expenses and focus on merchant payments has been their sort of payment strategy. And then naturally, they have 50 million monthly active users. They have close to about 20 million merchants signed up on their platform. They present opportunity to do merchant lending, consumer lending, consumer wealth management, consumer insurance, and so on and so forth. So all these non-payments revenue lines now almost are close to 20% of the total revenues. This obviously includes their internet commerce business as well. And going forward, obviously, the idea is to kind of make that a large part. So what our report highlights is how does that piece become a significant part of the revenues? And as sort of the spending and the expenditure kind of dials down or starts to become more predictable, you start to see a more sustainable organization from a long-term profitability break-even point of view.
Okay. Breaking this up into pieces. So on the merchant payment side, and Paytm is not the only one, obviously, that's going after merchant payment. I think generally the sense is that a lot more people want to push that avenue. There's real money to be made there, and if there is, who's sort of the best placed on that side? Isn't somebody like a Jio, hypothetically, if they want to get aggressive, sort of a natural winner if merchant payments is the next big thing?
Yeah, so Jio is a natural winner in many places, but so far we haven't seen much in terms of in that direction. I would say that overall, Paytm competes with multiple players. So on the payment gateway business side, it competes with PayU and Razorpay. On the merchant POS side, it competes with the banks and it competes with some of the independent point of sale acquirers. So overall, I would say that business is, I wouldn't say it's extremely profitable, but it's definitely sustainable. It doesn't require cash burn. It makes fairly healthy merchant discount rate, upwards of 180 bips or so. And that makes the business sustainable. And you need to do that business, otherwise you won't have merchant engagement, and you will not have the full suite of merchant services that you need to provide. Because the merchant services are not just like payments, but it's also, accounting, inventory management. Now everyone kind of, the whole khata scene and the dukan tech scene or the kirana tech scene is sort of fairly broad. So unless you engage with the merchant at that level, you're not able to kind of build further fintech lending services and so on and so forth. The other piece is also that merchants by default, in terms of which are the segments you're focusing in. So Paytm obviously focuses on the smaller end of stores. It's not going after the large stores. I think eventually it will go there as the whole software stack builds up. But for now, it's focused on the long tail of platform, and that's where the opportunity is. It's not trying to compete with the banks for a large store in a mall or something.
But the Google Pays, the Phone Pays, the Amazon Pays will also go after that same market, right? Yeah.
So they are different businesses in the sense that they are more UPI-driven businesses. So their focus is more. So you can't build a payment gateway business includes all channels, right? Debit card, credit card, wallet, which Paytm is still significant in and holding on to its volumes. Whereas those businesses are more focused on UPI. So it's hard to kind of build a full-scale payment business in that sense. But nonetheless, from a I would say from a physical store merchant acquiring standpoint, they do add their QRs. QR has almost become a commodity. So how do you then build a kind of a funnel there, where you kind of add more services, which is where I think Paytm has focused on, saying that everyone will put in QR. That's not a differentiation. How do we build more in that stack?
Okay, got it. The other piece is, sort of this third-party fee-based businesses, whether it's insurance, whether it's, money management services, etc. These are all sort of plus, right? Add-ons. I mean, these can never be core because you have no particular, you know better than anybody else. Anybody can do that business to the platform. It's all about reach, right?
Yeah. So once you have the users, you need to provide them full services, not just on the lending side, but on the saving side as well. So you need to add insurance, you need to add asset management. Now, there are different challenges for each of those businesses, right? So wealth management, if you just do mutual fund distribution of direct schemes, you don't make any money. So you need to kind of add value there in terms of non-direct schemes, and how do you kind of, how does your recommendation engine work? These are sort of wealth management platforms that we've seen globally. But again, if you get to some 6 to 7 million users there, which is what Paytm Money has built over time, you can sort of start building broking services where you start to make revenue. Broking services will come in some margin rate, which where you will start making revenue. So I think all of these platforms are that the base user growth is there, and the user critical mass is there, and then you need to kind of keep building the services. So you don't stop wealth management and just simply mutual funds. Can you sell them passive ETFs at some point? Can you be a manufacturer at some point? So I think it's a long journey. But it's about adding. So they've added broking and they've got off to a good start so far. Again, I would say early days on those businesses, but at least the user growth is there and there's some early traction.
Okay. The other interesting piece, of course, is the whole credit piece. And this is, I'll start with Paytm, but, want to look at it more broadly as well. There are multiple ways in which sort of credit is coming into the picture alongside payments, right?
Yeah, so credit is almost, the largest revenue pool in India is lending. There's infinite demand, but you can't, obviously there's the limitation is how do you underwrite credit risk? And given, again, you have some critical mass of users, can you provide a credit card equivalent service in the form of a virtual revolving credit? So the product that is evolving there is around this whole revolving credit product, which is a small ticket kind of credit card without the physical card. But a kind of a 1 month revolving product, which is what they call postpaid, or you could even call it pay later to that extent. I think that product is the one that has first found product market fit. It's more like a convenience product. Even if some people have credit cards and get an incremental credit line and it's small amount, you can kind of use it within the Paytm ecosystem. But more than that, because of UPI, now you can use it anywhere. The merchant acceptance problem has gone away because of UPI. That's just the national infrastructure. And by virtue of that, you provide them credit and they spend within the Paytm ecosystem or they spend it outside within the UPI ecosystem. It makes a lot of sense, and you're able to track where they are spending. You're able to track the expenses, and the credit size is so small that at some point, the users don't find it worthwhile to default on it. Because it's kind of like a convenience thing that you get habituated to it. At some point, yes, you will have to deal with credit risk, but the pricing and all of that is attractive on this to the extent that you can do risk-based pricing and do risk reward. So I would say the jury is still out in terms of credit risk on these platforms over a period of time. But so far, this product, which is kind of hitting the middle market, not the credit card audience, but kind of the middle market with a low ticket credit product, is kind of working. And I think that's the first product that will see traction. And then as you whitelist more and more users, you keep adding higher ticket products and so on and so forth. So that's, again, a fairly long journey.
But this will all be on the books of the banks. None of this, I mean, they don't have, they can't lend, right? So these postpaid kind of products, how do they, I mean, this is bank funding to these guys who then on-lend it in a sort of, something which falls between a credit card and a personal loan?
Yeah, so it's kind of like a virtual credit product. It sits on the books of NBFCs, other lenders who have the balance sheet. Paytm essentially is a value-added partner. So Paytm's core value add is that it has this users, it's able to track their transaction and expenses, and is able to kind of provide those behavioral and transaction insights to say that, look, these are the users I feel are good quality in my sort of ecosystem. And these are the ones where we can whitelist and provide credit. So to the extent Paytm adds value to the credit underwriting process, it gets paid more than normal distribution commission, because the normal distribution commissions are not very high. But if you add value to the underwriting process, is when it's very similar to the Ant model actually in China. To the extent Ant has proprietary insights on its users, the take rates go as high as 3, 4, 5%.
Okay, this is part of the broader sort of evolving and very fast-growing BNPL market, isn't it? I mean, the whole move towards BNPL seems to have gathered some amount of momentum in the last 6 to 8 months. You're hearing just a lot more about it.
I mean, the reality of India is that there are 60 million credit cards, which can only grow at a pace at which banks can issue credit cards. These are not like digital products that can be sort of very fast. There can be, I mean, there's a natural linear growth attached to credit cards. So what do you do with the remaining 100 million, which have credit bureau records, may have income? How do you kind of give them credit? So you give them credit at the point of transaction. And it's also kind of part of this whole global trend where credit is getting bundled with the transaction, rather than, like an episodic personal loan that people would take. So you would do that only when you have like a large ticket purchase to be made or large ticket expenditure, like an education or marriage or something. But otherwise, credit is being consumed as part of the transaction. So BNPL is part of that wave. And then from an Indian context point of view, I think 60 million card means 30 million users. So that's just nothing relative to the addressable market that could have. So that's where some of these BNPL players are fitting in. They're tying up with the e-commerce players, they're tying up with the direct-to-consumer brands, and being able to kind of offer this credit. And yeah, this revolving credit product is part of that overall sort of micro credit, consumption-based credit landscape that is evolving.
So okay, I'm moving away from Paytm now. You're comfortable with the fact that this BNPL is not seen as credit and anybody can do it, and no regulation.
So BNPL is credit. We have spent significant time.
But the guys who are doing it are not all of them are regulated entities which are permitted to lend.
Yeah, so I think the way they do it is they have the position as technology companies which do underwriting, and they build the plumbing, and they do the integration with the merchant, and then the loan goes and sits in the books of the bank. Because banks are funding partners. Many of the banks are funding partners for this, and banks want to participate in this because this is beyond the credit card base that they normally touch into. So I would say that it is credit. At some point, you might see regulation. I think regulation is an outstanding issue that we've seen. We covered this company called Afterpay, and we've highlighted even in that this regulation is a significant issue across the world. Where so UK passed some regulation on BNPL. So over a period of time, like with anything new, regulators will figure out a way to kind of regulate that. It's a product that consumers like, clearly. Particularly the set of consumers which don't have credit cards or have not been habituated to credit cards.
Yeah, no, and it's a product which everybody seems to be interested in. I mean, I was surprised to see that even banks want to do this business. I mean, it was surprising to me because they can do credit and they can do credit cards. So it was surprising to me that they see utility in the BNPL segment. But you've explained this is a segment that might sort of fits in between somewhere.
So banks have this realization a bit late, though, that actually banks were in the balance sheet building process always. So they would do things which would build their balance sheet very quickly. Mortgages are great, corporate banking is great. But at the same time, they realized, if you look at a player like Bajaj, has acquired 50 million users over the last 10 years with microcredit BNPL-like product, which we didn't even call it BNPL when Bajaj was doing it. So Bajaj does in-store BNPL. So banks have woken up to this whole customer acquisition piece, right? And now, sort of post-COVID, very few people entering branches becoming more fairly localized business centers. You will see banks wanting to be part of digital platforms for user acquisition. And even if that means the credit ticket size is small, but they want to do it for the users. Because otherwise, how would they acquire the users for all the kind of services that they want to sell? Because banks eventually want to sell them larger ticket products.
Yeah.
But how do you get them in the funnel? So banks have added pay later on their credit card. Banks have added pay later on the debit card. They work with players like Pine Labs to do that. So banks are obviously not giving up on this space. They clearly see themselves as critical to this.
And where do people like Bajaj fit in? They seem to have a very aggressive strategy, new rollout, although I'm not entirely clear what all they intend to do. Where do they fit into this whole story?
So they are the largest. I mean, now that we call this BNPL, let's call them the largest BNPL player in the offline space. They're not so big in the online space, but they're the largest. I mean, I think
that's for the cards, the EMI cards, right?
No, not really. When you go to, it's like a bespoke credit product, right? When you walk into a store and you want to buy a washing machine, they'll offer you a 6-month or to a 12-month loan, and that's like a BNPL product. But they would obviously not do it. They wouldn't be so as technologically integrated as some of these new age BNPL players are. So for them to move from that model, now that the consumer behavior is shifting from offline to online, people would always go buy the washing machine in the store, but now they'll be like, okay, I'll order it and let's see, it will come to my place and somebody will come and install it. So this offline to online shift, how do you capture those specs? And banks don't have the problem because banks have credit cards. Banks can immediately, credit cards are easily used online. So Bajaj not being a bank has to do co-branded credit card partnerships with other banks and things like that. So this whole shift that Bajaj is doing is saying that now I'm going to become significant in the online space also. So let me take my users, let me take my merchants, put them on a platform, build a kind of a fintech ecosystem with payments and e-store and all those things, and then give my users an opportunity to spend on my marketplace. Why are my users, which I acquired in the store, going to Amazon or Flipkart and buying their stuff? So Bajaj wants to kind of retain their customers, sell more to their customers, and then observe their customers in this digital native kind of an ecosystem where it's able to see more, it's more intelligent data, able to cross-sell more and all of that, right? So we've seen this in other markets also. We've seen this in other emerging markets like Brazil, Russia. There are players who were actually credit card players and then eventually started to build this lifestyle, broader kind of ecosystem. Because essentially, if you give them credit, the consumers are going to spend somewhere. So if you don't capture those spends, then it's kind of a waste to have that user.
Okay. We've seen a fair amount of attention paid by banks as well to their own apps. SBI, has always, caught attention. But that space of banks building out these super apps, how's that playing out? Is there a clear winner there?
So banks don't have super apps. Banks have mobile banking apps. They are fairly functional in the sense that there are banking products attached to it. You can see your account and you can see your balance and all of those other things. And they've automated significant banking transactions so that you don't have to go to the branch. So in that sense, it's a kind of a banking app. Now, obviously, they integrate e-commerce, they integrate other things. But if you kind of see the number of users that banks have, so if you look at our data, the highest is kind of the large private sector banks have close to 1 to 1.5 million users, monthly active users. I mean, that's nothing relative to what someone like that. So over a period of time, banks will have to build stronger engagement on their digital banking products. They will have to kind of make it like a super app ecosystem. They're obviously limited by regulation. But so far, I would say banks have done a good job of transferring a lot of activities from the branch to the app. But now this whole fintech ecosystem, super app ecosystem, adding multiple integrations, all of that, it's sort of the next stage which some of the banks in our view are gearing up for that.
Okay. Jumping to the UPI ecosystem, I loved your description of it in your latest report. You called it a revenue-less, cash-guzzling land grab. What's next on UPI when everybody's spot it out? We've got some limits now from the NPCI on market share. What's next in that ecosystem?
So the next is we'll have more UPIs. We'll have multiple. So India is going to be, which is why I felt, which is where we have tried to give a rational view that players should now focus on monetization. They just can't keep going after this because this apps in India is such an open market. It's like a president to the world, right? Literally, we've had global investors talk to us because they want to study India. It's like a test bed in terms of the innovation that we've seen on UPI and payments. So India is going to be a multi-network, multiplayer payments ecosystem. Multiplayer is obvious by now, but we're going to go to multi-network. So you have these Jio, Tata, and other players who have kind of bid for that license. And obviously, all of them will have their own super apps, which will kind of ride on some of those rails. So to kind of keep going in that direction is hard over a period of time. How do they build revenue? Where do they kind of focus on? So I think the design space is very broad there. Are you going to build for
Gautam's connection there?
I am back.
Yes, you're back. Sorry, we lost the last 10 seconds.
No, so I think I was making the point that if you look at what these new payment rails could be, some of them could be focused on just e-commerce. Some of them could be focused on SMEs and so on and so forth. So the design space is very wide there. And how does that whole for-profit versus not-for-profit dynamic work out between NPCI and others also needs to be designed. So I think India is on a long road to this payments democratization, so to say. And then players will have to be more rational in terms of how they go after that, how they spend their dollars. Because, you can't just keep spending infinite dollar on that, which is why we use those terms.
Okay, got it. Gautam, the toughest of all questions is coming your way now. To the 40+ user who already has a card and is seeing these new innovations day after day, some of which I'm convinced are useless. What is all of this going to do to us? I mean, you'll have an NUE which will have another UPI linked network. What's it going to do to me? Why do I want it?
I mean, you'll choose your favorite app, Ira, and then you won't even know which payment rail it uses in the background. So you'll choose whether you want to use a Google Pay or a Paytm or Jio's payment app or Tata's payment app or Tata's super app. And then at the background, all these are interoperable pipes, right? They all talk to each other. And the most efficient, you will obviously make the choice, and merchants will make the choice in terms of pricing and other things. So for a user, actually, it's going to be absolutely seamless. They will just choose the app and the rest will be figured out. The good part is that there'll be competition. So the merchants who can sort of bid on pricing and things like that. And over a period of time, everyone would want to kind of attract merchants and users. So it's good for merchants, it's good for users. I don't think it's great for the consumer. Each of these players will have to figure out what's their strategy. So Paytm obviously said, I'm going to do this, but I'm going to do this more sensibly. And some people will say, I'm going to fight this till the end. Till my competitors give up. So there's a wide array of strategies there.
Gautam, last question. Can't let you go while this is not a long discussion on crypto at all, but I do want to throw in a question. What's your understanding of how quickly interest in crypto in India is growing? And of course, alongside we've seen this comedy of errors play out on regulation. But you look at that ecosystem very closely as well. Your sense is that interest in India is high, it's rising. And pending some regulatory accident, India is a big market.
Yeah, so crypto is obviously a whole new world with multiple ecosystems around payments, around decentralized finance, NFTs, art. So, it's almost like the internet, but except that it's internet of money. So I think where regulators and multiple governments are getting this wrong is they realize that they can stop their users from accessing the new financial internet. It's almost like governments acting heavy-handed with the internet of the past, but obviously there was no money involved there. And because there's money involved there, there's sensitivity. So I would say there's increasing interest because it signifies freedom to kind of do whatever you want with this new ecosystem. And that's where the younger audience is obviously getting a lot attracted. And they don't like when governments tell them what to do with their money. And that's where this friction is coming from. So I think this is a long adoption wave. We will see ebbs and flows. We will see huge volatility in Bitcoin prices and other crypto prices. But I mean, we said the same thing 4 years back and said the same thing another 4 years back. So every 4 years, some people will say this is going to die. But then it's just very hard for this whole ecosystem now that it's got a life of its own. So yeah, I mean, it's a nice dance between governments, regulators, new users, new founders who want to build in this ecosystem and not go to Silicon Valley or build in Bangalore. So yeah, interesting times.
All right, we'll have an opportunity to talk about that in later days, hopefully. Gautam, thanks so much for trying to make sense of this whole payment ecosystem for us. Appreciate you joining us here on BloombergQuint.
Thanks, Ira. Bye-bye.
Thanks for watching.